So let's talk about a high yield dividend stock that you should buy potentially and look at holding for a decade worth of income. This is a company that's been paying dividend yields for over 120 years, and it is on the higher end of the spectrum as far as how big the dividend is. Okay, so I want you to drop in the comments below, who do you think this is? If you want to take a guess before I reveal who it is, it actually is on the screen here, but don't look. Who do you think where I'm talking about? Okay, so before you do that, I want to say I appreciate you giving me a few minutes. And so here we go. So the company we're talking about is Union Pacific. Now, you may go and kind of yawn a little bit and move off, but don't leave yet. There's some interesting stuff here. Okay, so Union Pacific itself, and I pulled up a chart here for you. Again, it's not an AI stock, so it's not going up 45%, 100%, 200%. This is definitely one of those stocks that is, I think, part of potentially a good diversification strategy. But if you look at the percentage gains, like right in the last 5 days, it's up 7%. And last month, it's up 12.5%. 6 months, 24%. Year to date, about 16%. So obviously, in the last 6 months, it's up 24%. And in the last year, it's up 25% overall. Again, it's not going to win any records, okay? But that's actually not the point, okay? The point here is it is a very good, stable stock that could be a very nice addition to the portfolio for diversification purposes, but it is paying a dividend, okay? And it is paying a higher yield dividend than compared to a lot of other dividends out there that are like usually in the 1% range, okay? Union Pacific's is higher, all right? So we're gonna get into that. So over the past 3 years, the industrial sector is the third best performing group in the S&P 500. And right there on in the green is where we get insight into what Union Pacific's yield is for its dividend. But for the most part, 1% is what people earn on this Spider ETF, which is an industrial select sector Spider ETF. So the fact that Union Pacific is offering a 2.18% yield puts them in that high yield sector, okay, relative to the industrial sector and the broader market. And there is a lot of people out there that like dividend stocks. I am one myself. I mean, why not? So the fact that we are coupling it with, look, a company that's been around for 120 plus years in different iterations, but has been around, right? And ultimately has a stock that is extremely stable in the last year, up 25%, and it pays a 2.18% to be exact dividend yield. I think that's a very interesting combination if you're looking to add this type of a stock to your portfolio. Obviously, you clicked on this video because you were interested in a dividend yield stock, a high yield dividend stock, and this does not disappoint. Okay, a lot of times your dividend yielding stocks are not the most sexy, are not the most exciting ones, but again, I think that's really the point. You get a good return on them, 25% in the last year for Union Pacific, plus that 2.18% yield. Okay, so a couple of things that we need to talk about as far as Union Pacific. They are pursuing a merger with Norfolk Southern, okay? And that deal is definitely facing, it looks like, an uphill battle from a regulatory standpoint. It looks like kind of the Democrats and the Republicans and bipartisan are going to apply security. So this one's one of those deals that looks like it's going to probably have to have an uphill battle, this merger. Okay, so in the blue, the prevailing wisdom on Wall Street is that UP is just fine on a standalone basis, so they don't really need them. The combined company would add $2.75 billion in earnings before interest, tax, depreciation, though new revenue and cost savings combined, free cash flow could surge from 7.3 to 12 billion. Okay, so that's pretty significant. UP, Union Pacific, has some of the best operating margins in the industry. Again, been doing this for a long, long time. And I want to stress and end on this note. If there's one way transportation companies make names for themselves, it's by being dependable. You notice I've said that word about, 17 times in this video. I say the same is true of dividend stocks. UP has paid a dividend for 126 years without interruption, and it's on a 19-year streak of increasing that payout. All good things as far as checking the box if you're looking for a good stock that is appreciating in value. UP's up 25% in the last year. I haven't gone back and look at the 5 or 10 year, but in the last 19 years, they've increased the dividend payouts, and they've paid a dividend for the last 126 years. All of that stuff adds up to some pretty good and compelling information and story as far as I'm concerned, as it relates to a good stock to look at from a high yield sector and 10 years of income. I mean, if you want to buy and hold it for 10 years, you're not going to lose with this one. You're not going to miss out. This one's not going to be, one that you're going to regret buying. Again, you're not buying it because it's going to go up 50% in the next year. That's not the type of stock this is. It's not an AI stock. It's not, that kind of thing. It's completely different, but it's completely different on purpose. With that, I appreciate you giving me a few minutes. Please hit that subscribe button on your way out. See you.